Hi, everybody. Welcome to Domain Sherpa. Today, we've got a great episode of Off the Market Forever featuring James Iles and Chris Zuiker, where we focus on the domain space through the lens of end-user acquisitions and upgrades. And on today's show, we talk about domains such as Strive.com and Fetch.com, along with a recap of NamesCon Global and some interesting data around domain upgrades and the Crunchbase Unicorn board, which is its list of unicorn companies who are those valued at $1 billion or more. So you don't want to miss it. And remember, if you're listening to the audio version of this podcast, you could also watch the video version at DomainSherpa.com and on our YouTube channel at ds.tv. We now have all the past episodes up there as well, so you can dig into the largest library of domain-related podcast content in the world for free. You can also check us out on Apple and Spotify and other podcast platforms as well. As usual, big shout out to Dan.com, the #1 place in the world to buy and sell your domains, with a special platform made for domain investors. And with all that, it's time to get into this episode of Off the Market Forever here on Domain Sherpa, where all roads lead to domains. What's up, Sherpa Network? Thank you for tuning in today. My name is Jonathan Tenenbaum, a.k.a. JT, a.k.a. Jay On, a.k.a. Sherpa Winfrey, and I'm the host and producer of Domain Sherpa, where all roads lead to domains. Today's show is Off the Market Forever, which is really one of my favorite shows with my boy James Iles and Chris Zuiker. Let me go ahead and do the introductions. To my right, all right, I got my boy Chris Zuiker, a.k.a. Zuiker's Island, a.k.a. The Plug, a.k.a. World War Z, a.k.a. The Brand Whisperer. Chris is the head of sales, senior domain broker for mediaoptions. Leveraging his 20 years of sales and marketing experience, he went from managing accounts totaling over 9 figures in sales to doing 9 figures in sales and domains. So he is the man, speaks to more high-level decision makers, CEOs, brand managers, domain owners than pretty much anybody else in the world, and has taken his rightful place among the top domain brokers in the world. And so he's my pleasure to call him a friend, a colleague, and a peer. And always love when we rock out on the show, man. How you doing?
Boom. Awesome. Good show today.
Yeah, let's go. Excited. All right. And then last but not least, since there's only 2 of you, right? Somebody's got to be first. And if you're not first, you're last. That actually is the case here on this show. Below me, I got my boy James Iles, a.k.a. James Names, a.k.a. James Iles of Man, a.k.a. Walter Cronkite, a.k.a. House of James, a.k.a. Blame It on the James, a.k.a. I Will Walk 1,000 Aisles. All right, domain industry writer and consultant, publisher of James Names, which is a domain name centric blog, and he is the publisher of that. Before founding that, he was a lead writer at the Name Pros blog, publishing over 700 articles between 2015 2019. Since then, building James Names into one of the domain industry's most popular sources for data research and industry news. He's been a source in articles in several major news outlets, including Mashable, Business Insider, Vice. Aside from James Names, James also works among some of the best and brightest in the space, including writing for us. So full disclosure, he's a writer on the mediaoptions blog, where he does an incredible job, and we'll talk about some of those articles, along with DN Academy, Domain Name Wire, DND.com, and other than that, working behind the scenes on projects for investors, startups, and entrepreneurs. What's up, James? How we living, man?
Yeah, all good. Part of my research for this program was looking up who Walter Cronkite was. So I know exactly who he is now. So we're all good.
Good. Yeah, well, look, it's like I tell people, you are, in my opinion, the foremost journalist in the domain space. And, when I think of old school, when I do the AKAs, right, it's like you try to find those popular public, icon type figures. And even though Walter Cronkite kind of predates most of us, including that's more of like our parents' generation. But, he was like the newscaster journalist back in the day, 60 Minutes, so that's where it comes from, man. You know what I'm saying? So
cool. No, I'd say it's a pleasure to be compared to him.
Oh, yeah. No, all good, dude. All good. So, all right. Well, look, we're back. We do this show so the audience understands. I mean, here on Domain Sherpa, we say all roads lead to domains. And we started this show a few months ago. We run it monthly with these two guys because I think we've got one of the foremost domain brokers, one of the foremost domain journalists. And what we really try to do with this show is approach it from the lens of the end user, right? We talk a lot on some of the other shows, Domain Sherpa Review, where we do the domain game, and it's a very domain investor focused show. I mean, we still want to provide a lot of information that can be useful to domain investors. But again, as I mentioned in Chris's intro, he's talking to these some of the key decision makers at some of the biggest companies, and really when we look at the ultimate goal of a lot of domain investors, it's like, hey, you want to get your portfolio up to that point where you're dealing with these big, premium domain names. If that's your, look, everyone has a different philosophy and a different strategy and a different budget and timeline and not time horizon and risk profile and everything. But, if you're trying to get to the point that you want to play in the space of super premium domain names, which is where mediaoptions exists, there's a different there's mentality and approach and an understanding that you need to have on how to deal with these folks that are making these decisions, right? And that's why, and then James on his end, he's writing these articles constantly, interviewing some of these exact people that we're talking about that are spending, millions of dollars, hundreds of thousands of dollars on big domains. And it's a question of like, how do those deals get made? How do you find those buyers? I mean, it's one thing to acquire the domains, but then it's like, if you have one or, you are representing one or something like that, it's like, okay, now how do you actually go out and sell it? How do you get into the shoes and understand from a big brand perspective, what gets them over the hump or into the position that they're willing to spend the kind of money that it takes to acquire those big, business changing domain names. So that is the goal of the show. And we otherwise just have fun talking the talk because this is what we do. And so it's always our pleasure to bring this to everybody. And I always enjoy spending time with these guys because they are some of the best in the biz. So with that, exactly, man, let's go. Sound bites for days.
Yeah.
Sound bites for days.
Feeling it today. I'm feeling it. But yeah, so, all right, well, look, let's go. We got a list of things, some articles, some different sales we want to talk about. And, so James, why don't you kick off? Like, let's let you, what you thinking, man? What do you want to talk about?
I just wanted to talk about NamesCon because you guys have been there the last couple of weeks, and I just wanted to know how it went because it's the first in-person NamesCon since, I think, 2020.
Yeah.
And I want to know how it went and how it compared to the online versions because that's all that I've done since 2019. I went to the 2019 NamesCon in Las Vegas, but it's been a long time since then. So I want to hear how it went and how I think it was a fireside chat you guys had. How that went.
So and we talked a little bit about this on one of the recent DomainSherpa reviews. So try not to make it too redundant, but I think it's obviously it was a very important event to have. It was important to get everybody back together, in person. It had been, I think, 942 days, but who's counting kind of thing since the last prior one, which was also in Austin. But even that one was a little funky. I wasn't there, but that one was right as COVID was hitting. So it was, and when I think about kind of NamesCon, a few years ago with the Vegas conferences, I mean, the energy and the activity around those was really special. And I think this one, we got back to that to some degree, and so, it was pretty well attended. I thought the space was great that they had it in Austin. And there's nothing like getting, back in person. We did, we were pretty involved, across a couple of things. I was master of ceremonies along with Krista Gable on stage one. There was a stage two, but like I tell everybody, there's, stage one is number one for a reason, you know what I mean? But shout out to stage two. Shout out to the off-brand stage two, the .co, if you will, of the stages. And, so that was a lot of fun. And then mediaoptions, we did a little session at the end when they opened it up to the general public to kind of talk about, some of what we talk about on the show, buying, selling big domains, how, some of how our process works and just some of how, and how that works in general. But, let's let Chris talk more about, kind of what he was up to. He was doing a lot of really cool stuff, talking to a lot of people. So.
Yeah, no, I think you hit it. Like the vibe, the energy was kind of back at this one. The first show in Austin, people were getting used to it. It was like you'd been in Vegas for a while. At least my first NamesCon was in Vegas. I'm not sure was it before that, but I think everyone was more familiar with Austin, the surroundings, the restaurants, and much more energy. But it just could have been pent up energy too. I mean, we hadn't seen anyone in a while, so I think the next NamesCon will be, hopefully we'll keep that up. I think just the familiarity with it. And, I came in with kind of three big bullet points. The first one was just in talking to everyone that was there's lots of niches. It was neat to see everyone's, kind of niche, right? I mean, so we got the big domains, right? The premium domain names, the ones that are the higher prices. There's some investors that are niching into the meta space, right? In the metaverse. Some into, I don't want to give too much away because I don't know too much confidential, but everyone had like this little niche as far as where the domains were. It was neat to see some of the sales. I mean, like just, hey, what was your biggest sale? 6 figures, 5 figures. I think I one was like in the 7 figures. I don't know if some of those were publicized or not. I don't remember them being publicized, but there's sales happening out there. And that's to my second point. So the first one is niches, and there's some guys making some good money. People are making money, pick your niche, pick your lane, become an expert. The second one is that it seems to me that it's really, the theme was really brand upgrades, right? So there's the meta theme, obviously the metaverse theme, people coming in, not sure how things are repositioned, but a lot of the bigger sales were just companies upgrading, like even to some brands that, I don't know. I mean, if you said, hey, I got this domain name, I'd be like, okay, talk to me. Like, why is that valuable? But there's a brand out there, and that brand has raised money and is successful. And, a big sale happened, right? Or a big sale is in the works to happen. So, it's really like, I think the theme, I've heard, I think it was Rick Shorts was saying this in one of his Twitter tweets, and it was the same thing as like, it was really the season of brands upgrading their brands, because it was really a great tweet, because he was like, now all these companies that launched 2 years ago on the .co, all these other extensions, right? They're like, oh shoot, we need the .com, right? Yeah. And so you saw this massive momentum with companies that tried the other extensions, just realized, hey, we're losing traffic, right? The 7 dimensions, which that was the theme of our presentation, the 7 dimensions. And then, kind of the excitement was is it the ENS handshake? Is that how you, JT? Is that
the ENS is its own. Yeah. So there was a whole blockchain component.
Yeah.
And I actually thought that was really cool, because we've had times in certain, conferences and things where they sort of try to tap into the pulse of what's hot, right? And in doing so, dilutes potentially, that kind of thing, or it's something that doesn't maintain some, and I think crypto is an interesting thing because of how we've always sort of, we all consider it under the same umbrella of digital assets, but how do you really make it fold into a NamesCon conference, right? Because there are plenty of crypto token conferences that are out there, and it's like, how do you bring them into, in a way that, feels consistent, right? And I thought this one did a really good job because they really did a handful, because the blockchain domains are starting to come into their own, right? And you've got, a couple of different ecosystems, right? You've got the handshake domains, and then you have the unstoppable domains, and the unstoppable, your .crypto and some of the others, .zel and, things like that. And then, then you also have the ENS domains, which are the .eth domains, right? So you've got a couple of different buckets based on extension, based on, call it platform or which actual blockchain it exists on, right? The HNS domains are on the HNS, blockchain, right? And, ENS are on ETH, and, Unstoppable is on their own chain. I believe that's how it's all sort of distinguished. But either way, there were a number of sessions about that. And then one of them, so you have this situation that's taking place where on HNS you can get any dot whatever, right? For the most part, I can't, they're not ICANN accredited. And everyone, and they're all starting to kind of jockey for some of these, like, what's next with the next ICANN round, so effectively what happened is you've got somebody who registered on HNS.wallet. Meanwhile, you've got the Unstoppable folks, and in full disclosure, mediaoptions, Drew, DomainX, we're invested in Unstoppable as well. We also have some handshake extensions, some handshake tokens. We also have .eth domains. So we're involved in the space, not crazy heavy, but we're involved. So in the interest of full disclosure, just want to throw that out there in the universe. But anyway, so this guy registers .wallet. Unstoppable is either released, I think is released.wallet. And then they brought a lawsuit against the .wallet registrant on the handshake ecosystem, and for trademark infringement, basically. So they were having a panel that involved 2 of the HNS, the handshake, evangelists, if you will. Bradley Cam, who from Unstoppable, as well as Soren was on the panel, and somebody else was on the panel. And I guess it turned into a pretty spicy, heated debate, around, sort of like this, this lawsuit, and it's a, sort of spitting in the face of the decentralized, ethos around a lot of the blockchain domains and just the blockchain ecosystems in general. And, it just got pretty heated, and there was a lot of back and forth and that kind of thing. So it was an interesting.
I thought it was awesome.
Well, I mean, what it shows you is that
I like a good conversation.
Well, and that's the thing. And what it shows you is you've got a lot of passionate people that care a lot. And not just because it's the money, right? It's because it's also the ethos that are involved and the vision and what their vision of how these things are going to play out into the future. And you know, and they're taking it seriously, right? I mean, Unstoppable just got valued as a unicorn, right? $1 billion plus company. So, yeah, so I mean, it was interesting, and there were a handful of other, sessions that were in and around those blockchain domains and how a lot of that works, and and it's interesting stuff. I think it's going to be, to me, it's we still are very com centric and ICANN domain centric, Web 2, if you will, but the new stuff is picking up a lot of momentum, and there's a lot of interest and a lot of interesting opportunities bubbling in and around all that stuff. I mean, you've got big players in the traditional domain space that are also now getting a lot more involved. So you've got like Namecheap that's super heavy in Handshake and stuff like that. And it's like, and even like Zoran, who runs NamesCon, is an HNS guy. He's got a bunch of HNS stuff. And then it's like, you got other people that are involved in Unstoppable and like, and ENS, the ETH domains are bigger than all of them at the moment, just based on sheer number of registrants. And you look at the daily volume and activity, and and some of the legacy investors, even the Sherpa guys like Domain Shane, Shane Culture is like pretty heavy in flipping ENS domains, and so it was pretty cool. And that also brought in a bunch of new blood into the space. Like we saw some folks that we've only met on Twitter. We even Daniel Got Hits, who's 260.eth, who we had on one of the down the rabbit holes, and so it's just an interesting convergence of all this kind of stuff. But it doesn't feel it feels natural, right? It feels like
it definitely felt natural, yeah.
And anyway, so that was like a whole thing into itself, and I think that is the kind of thing though where when you look at these waves of what happens in the domain space to create sort of interest and brings in new blood and new money and and those things, it's like even when the first that big official ICANN round where they launched all the new GTLDs, that drove I think the highest attendance that they ever had at a NamesCon, and that was maybe 4 years ago or whatever, 5 years ago, one in Las Vegas. And so I think it's that and expanding the tent's important. And now I think also what's happening with the blockchain names is that you're getting folks like ICANN is paying attention, VeriSign is paying attention. I've mentioned this a few times. I had a conversation with a couple people who I used to do the policy stuff when I worked in legal at web.com and network solutions, and I'd reached out when I first started when I came over officially full time with mediaoptions, and I'd reached out and we were dabbling and getting kind of busy with some of this stuff. Reached out to some of my policy folks, and what do you guys think about these blockchain domains, about Handshake? And they're like, what's Handshake? And we're not really thinking about them. And these are some players at some of the biggest domain registrars in the world, or at VeriSign or at ICANN, and it's kind of like they were very much not on their radar. Now 2 years later, fast forward, and it's a different environment altogether. So I think that's another interesting aspect. But I'm sorry, Chris, I just went off on a big old tangent. But I know you were talking about, I think the various points and.
No, it was good. It was good. I mean, that was one of my objectives going there, was like, I wanted to learn more about those domain names because, I've been focused on the .com, obviously some of the other extensions, and I just hadn't kind of gone down that, shouldn't say rabbit hole, but
Yeah, no, I mean, it is.
Down that.
That's the thing. And I think it's a question, and for us, it becomes a question of like, okay, so for our client base, startups, VCs, big companies, big brands, is this something that they need to be aware of, right? Is this something we need to be actively working on because there's going to be a real demand at that high level? And I mean, it's interesting because when you look at brands and their adoption of blockchain domains, it's slow, but it's happening, and it's happening at a high level. I mean, you got Budweiser that bought beer.eth, you've got Gucci is now accepting ApeCoin, right? I mean, it's like there's stuff that's happening at a high level. It's not necessarily taking over, but the adoption is starting to happen, and it's happening in places that you're like, will at least force you to take some notice. So, but then also I mean, this is a whole nother topic that we could get into as far as like, should domain investors be investing in these domains if they're not already doing so, right? And I personally think that the .eth domains are especially interesting because they do have the most registrants at the moment, and the daily volume is there. And people are flipping the numerics and the digits, and there's the communities building up around that. But a lot of it will come down to, is the utility ultimately going to be there at the end of the day? And right now with the .eth domain, you could have, crypto, Ethereum, you could have it sent to your wallet. So instead of that having to type out the big long string, they could just send it to chris.eth if you happen to have that, But the interesting thing, though, is that you can use an XYZ name for the same thing, right? They've created the same functionality around, and with a .xyz domain, you can get the benefit of also putting up a website that's resolvable on the actual internet on the browsers that make up 95% of all browser, use in the world. So it's like, I think that becomes, and I've said this a number of times, I think, the adoption is going to be key. And for brands and for companies that are going to spend the kind of money that people would ultimately want to see for these domains, the utility needs to be there. I mean, there's a flex, there's a certain way, there's ID, social media, you can use a .eth. I only know of some people as their .eth domain. I don't know their real name, So there is sort of that.
Right.
Yeah, that pseudonymous, utility of having a cool domain that really becomes who you are. So it's like, Andrew's got drew.com, right? And that's like a big old flex for him. But people don't know him as drew.com. There's people that definitely know, I know, like I said, Daniel Got Hits is Daniel Got Hits or 260.eth, and people are known by numbers. And then you get into this whole thing too, where like we saw when, we call it like the China wave, where there was a big, around the .coms, and there was an enormous appreciation of value in the numeric .com domains. And there was a very liquid market taking place because, then you realize, like, from a culture standpoint, numbers are treated differently. And in some cases, numbers are favored because, now you have less of a language barrier, right? And, and numbers are treated differently, like in China and things like that. And we saw that with .com. So it would stand to reason, there's probably some overlap into .eth or other extensions if, the extensions themselves are popular enough. So anyway, but point being is, I think it's the kind of thing where, when we just, because this is what we do, we're domain nerds, this is our life, like we're in this all the time. So we're always just kind of keeping an eye on these things and looking for angles and opportunities. And I think that, we're at the forefront of a lot of this stuff, and I don't know what's ultimately going to work and be successful. I think there will be sort of levels of success and pockets of opportunity that are happening literally today. Big picture, will it become like, hey, every big brand is going to need their .blank domain that's purely a blockchain domain? I mean, maybe. I don't know. I think that, that's something we'll see.
Yeah, it'll be interesting. I know I talked to Paige Howe, and he has a clubhouse on Fridays I'm going to go to. I guess they talk about this. So yeah, it's super interesting. I mean, that was my big takeaway. Boom, but it was a good show, and excited for next time. Who knows when it'll be. Yeah,
so they're talking about it now. It sounds like it's going to be earlier. They're going to try to avoid having it in the middle of the summer, right? Because I think that was another challenge this year. Was it like smack dab in like August or at the end of August, and which limited some people, because you had the combination of people either traveling for summer or the beginning of school and all these things that, like, everyone's lives getting in the way. So I think the goal is to have it like late spring, early summer, so like end of May. I think it will be in Austin at least one more time. Which I think in the same venue, which was to me, Austin's not my favorite city to visit. Like, I enjoy Vegas because there's just a lot to do, and it's like, it's easy to just kind of, everybody loves Vegas, easy to get to. It's cheap to get to. You can stay pretty cheaply if you want. But I will say that the hotel, that the Omni and the downtown Austin area, and the accessibility to plenty of bars and restaurants and all these kinds of things, and was really awesome, and it was really well done. The layout was fantastic. So, a lot of super positive stuff, and everybody seemed to have the same take. Like, they were super excited to be there. We got some deals closed in person that we'd been, kind of hanging around that were, that I think that would probably continue to still be on the vine, had we not seen people in person. And, there was a real value to that. So, yeah, man. So next time, dude, get on a plane and let's go. You know what I'm saying? Yeah, next time's in person.
Come on, James.
From a selfish point of view, just to the NamesCon people, just put it in January, February, because January, February in the UK is absolutely freezing. So I want to go somewhere warm.
Well, that's the thing. I mean, when they used to have it like right after the new year, I mean, it was always like, Vegas, third week of January, fourth week of January. It was always like a great time because people were always like, all right, we're into our new year. We're kicking off our stuff. We got budgets. We want to go, we want to go mix it up and go do what we do. We're going to Vegas, baby. And, this is a little different. It'll keep it a little bit more contained. But, look, these guys are going to do what they're going to do. I mean, I think at the end of the day, they did a very good job of continuing to maintain, the flow of the industry, even when we were all like remote with COVID. And then, they do it as, they're the best in the biz with what they do. And, so hopefully they'll, continue this momentum. So, yeah.
Cool. Sounds like it went well, which is good. So
no, the auction was a lot of fun as always. I mean, it was good. It was good times, man. Good seeing everybody. Like, you forget, how much you miss people. I said this is the last thing I'll leave it with, and then we can move on and talk about some of the specific domain sales. But, in our personal lives, we've kind of gotten over the hump on a lot of the COVID stuff where we're seeing family, friends, you know what I mean? We're like in person for most of the stuff that we're doing for the most part. But professionally, a lot of us work remote, right? We're all distributed. Yeah. Those of us that don't work for big companies that go into the same office and see each other every day, we were isolated. So seeing each other in person at NamesCon was like the first time to see a lot, like, even to interact on a business standpoint, like in person for a while. And that was really, really cool, and, shout out to, shout out to, the NamesCon folks, and looking forward to the next one. Feel bad for the people who went home, who got COVID on the way home or at the conference. For me, I had been at Ape Fest a couple weeks prior, and that's when I got COVID. So I was kind of bulletproof in Austin, you know what I mean? So I came home without having that disruption, but I know there were
go to every party, just like hugging everyone.
That's what it is. It's like there were no masks and that kind of stuff. I mean, you have to be prepared. It's like, look, if you're going to get out in person, you can't, in my opinion, it's hard to kind of half-ass that, you know what I mean? You're either bear hugs and close talking in loud groups, or, you're just going to hear about it after the fact.
Masks and gloves from a distance.
Yeah, and that's I mean, even like you try to have a conversation. I was taking my kids to get a haircut yesterday, and I couldn't even hear the lady talking through her mask. You know what I mean? And it's like it's hard to have a real conversation with people.
Super hard.
And I'm not an anti-mask person. Look, if you want to wear a mask, do it. Like, it's all good. In fact, the one byproduct for me is like, I still, if I'm out in public, I'll wear a mask in the bathroom. I think that's fantastic. I'm like, man, I don't know why they should have masks sitting out there, like for people going into like the men's room in some places. You know what I mean?
Or an air purifier. But let's.
Anyway, yeah, exactly. Let's not get off.
What do you got next, James? What do you want to talk about next? What's the next topic here, just to move along?
Yeah. Okay. So cool. So I want to talk about. There's an article, I think, on the last DomainSherpa show, the last review show, JT, that you mentioned it, that was called At Least 100 Unicorns Use a OneWord.com. So, it seemed to go well. It seemed to go down well with all the community, so that's good.
Yeah, this was a fantastic article. So this one's on James' name. So this is on James's blog and his site. And did some great research. So Crunchbase came out with their unicorn board, right? Which was like, hey, or they actually just did they just come out with it, or they usually have it?
They came out with it earlier this year. So it's keeping track of private companies with a valuation of $1 billion or more. And as of now, there's just over 1,400 companies. But when I did this research, there was about 1,300. And so the unicorn board doesn't contain any data on domain names. So like I've the time to do it, so I went through and manually got every single domain name from each company's Crunchbase profile, 1,300 of them. It took a while, but I got some useful data out of it. And one of the takeaways was that 80% of unicorn companies use a .com domain name. But the headline of this one is that at least 100 unicorns use a OneWord.com. And
there's a bunch to unpack there, right? So, and this is why when people are like, man, you guys are .com maxis, and and you hear it from a lot of people that are, and I think it comes from a place of feeling like you kind of missed the boat at times, right? So to invest in that really, premium .com domains is not cheap. So you've got to have a big budget, access to funds, like all that kind of stuff. So, but when you really look at where, when you talk about your buyers, right? And you're talking about dealing with big brands, big companies that are doing this kind of like, that are valued at $1 billion, the biggest companies in the world, right? They're all on .com, 80+% are all on .com domains. And then when you look at it, so how many, so in at least 100, but I mean, of the 80%, I mean, how many do you think, because it's at least 100, but does that mean the number is like 110? Or does that mean the number could be 300 or something? Like, did you stop counting at 100, or what was the deal?
So basically what I did was I went to each Crunchbase profile for each of these companies and just got the domain name from that profile. So, sometimes after domain name upgrades or transitions to a rebrand, for example, they don't update the domain name. So sure. I think Clubhouse for a long time was still joinclubhouse.com on Crunchbase. So, for example, things like that, they behind the scenes, they've done an upgrade, but it still shows as the old domain name on Crunchbase. So I'd say there's probably conservatively like 50 more at least. So I feel like it's a good percentage of companies at that top level that are using a oneword.com domain name. And because it's such an exclusive asset class and these domains cost so much to secure, it's just I feel like it's a real seal of approval for .com domain names and these oneword.coms. I mean, there's still space for .ios, there's still space for .cos, but once you get to the top echelons of business, then .com or nothing really, it seems.
James, how big was the original list?
The original list was, my original list was around 1,300. Okay. Now there's about 1,400 on the list, so I haven't done the full lot, but
it's crazy though. It's like 100 more billion-dollar companies just kind of like are now in the mix. But yeah, so you're talking like 1,300 companies, 1,000 of them are using .com, 200 of them are using oneword.com. So it means there's probably an opportunity for some additional upgrading that'll continue to happen, right? Which is
absolutely.
But I think it also, like you said, I mean, and what was crazy to me was when you read the list, like when you had like, here's the sample or whatever it was, and it's like Stripe and like all these big companies that you call them, and like just companies that you know what I mean? It's like it's funny. I remember back when because I was a finance major in college, and I remember like we'd go through certain exercises around publicly traded companies, and I'd always be surprised at how many like publicly traded companies that were making such like crazy money, oil companies and that I'd never really heard of, you know what I mean? And it's like that would kind of fly under the radar, and maybe for branding, that for them it doesn't matter as much, but I think especially in like this new world of tech and so much of it being driven by marketing, social media, online marketing, digital presence and everything else, it's like it's even more and more critical than ever. And it's just, I was kind of surprised when I was reading through the list is how many of those like I'd heard of, and some that we'd actually helped them get their domains, things like that too, which is also pretty cool. But it was just neat, and you're like, they're clearly like the reasons. I mean, they're just clean and it's like a brand in a box, you know what I mean? Like we say, I mean, it's just contained and it's valuable. It's there. So
and also the other takeaway I got was just how many companies brand around a short single dictionary word. I mean, it seems like such a big trend at the moment. So I was just wondering why so many companies do that. From your perspective, why do so many companies seem to do that?
Chris, this seems like...
Yeah, I mean, so I was just looking at that list, seeing which ones we brokered. I was like, okay, touched that one, missed that one, got that one. Yeah, I mean, to me, James, it's really, they're buying the momentum in that keyword, right? So, I mean, it's much easier. There's two routes you can go, right? You can make your domain up or make your brand up, right? Like Google or I don't know. I mean, whatever Spotify, whatever, right?
Microsoft,
make that up.
Yeah.
Or you can use one that's already there, right? So when you make something up, you have to put a massive investment into that domain name to have it make it mean something. Versus when you have when you go after a one word, or you go after keyword, or maybe it's even two keywords, right? Basically, you're buying that momentum, you're capturing that momentum, and you're leveraging that momentum to quickly, bring, I guess, brand equity to your brand, right? So in one sense, you pay for it, right? Build it. The other sense, you're paying for it to get the domain, the brand, but you're capturing all that wind. And that's really the main reason why. Not the main reason why, but that's it's simple. But it's like you're buying the equity already in that brand, and and it's incredibly inexpensive when you really think about that. What you're paying for that domain in the .com, own a leadership position, and what it really means to your brand, the ability to set set the frame for your customers.
Yeah. I think it also shows ambition from a company's perspective. Like if you pick up one of these pretty early on in your company's life cycle, like in a Series A funding round or something like that, then it just shows to your clients, it shows to investors that you're ready to get to the big time with this. And I feel like that's a really important point that a lot of people perhaps miss with this top group of domain names, that they can just transform a brand and they can show the world exactly what your ambitions are just from a domain name. You know, they're such transformational little digits, and it's just like fascinating to see that. And it's fascinating to see a company grow from a seed round all the way up to one of these unicorns. So
yeah. Well, your blogs are awesome because they really capture that from the I was just looking at my notes here. You know, pulley.com, they literally said it like, listen, it gave us instant credibility, right? He said, I think you're able to get a good domain. He said, I think if you're able to get a good domain and a good brand name, the benefit that you get there is instant credibility. Immediately think of the company as more reputable as well. And I think some other ones, they mentioned that, you know, their investors, you know, it helped with their investors because they're, you know, they thought, wow, okay, these guys are serious. So yeah, everything you said, James, and that it's reinforced in all those articles and the interviews you've done.
Well, I was talking to a guy in the week for an upcoming media options interview, and basically one of the points that he had, he's a serial entrepreneur, he's bought several premium oneword.com domain names for his companies, and he said that venture capitalists take notice. Yeah, as soon as you've got one of these on the front of your pitch deck, they just take notice.
Yeah.
So,
well, you know, we've mentioned it a number of times. You know, Calm, which I said earlier. I mean, I remember Jason Calcanis saying one of the reasons he invested in the company was because they had secured Calm.com, and he felt was like the perfect domain, and it gave it that additional level of, you know, credibility and confidence, and you know, and his confidence increased because of it. And and especially when you have the right mix, right, of like, you know, a name tied to the business, and it's like, you know, you got this one word, this dictionary word that already has, you know, instills a certain level of like understanding and everything else, and it ties to what the business does, and you have this like kind of really good marriage of, you know, sort of business, whatever the business is versus, you know, the name, and it just all kind of works together and makes sense. And then it's just like when people want to find out what the deal, I mean, it's just, it all just works. And I mean, and there's a reason that, and now we've seen it at literally at the highest level, you know, that it's validated that that's what the deal is. And, you know, I think it's interesting because we talk about these other extensions, and, you know, there are definitely a bunch out there that people, you know, that are popular and that have become very popular, like in the Web3 space and the crypto space, which drove a lot of the activity over the last year and change. You know, your XYZs and your IOs and all that kind of stuff. And that's great. To me, it just means like, kind of to your point, I don't know if it was Rick or whoever you said it, James or Chris, that just means these are going to be the upgrades that we're going to see happening, you know, as these companies are successful.
Yeah, right.
You know, OpenSea went out and got their .com, right?
You go onto Crunchbase and you have a look at all the brand new companies on there. You see the .co's, .xyz's, .ios, all of these, and I keep track of a few of them, and then like clockwork, 2 years, 3 years, a lot of them are just starting to upgrade, starting to get the funding rounds under their belts, starting to get an appreciation of what a really good domain name can get them, and then they get it. They manage to secure it. So
so let's talk a little bit about that, because I know you put together some statistics around upgrades, and, you know, and this is something that you spend a lot of time writing articles about and digging into to try to understand, you know, some of the you know, the thinking behind that, and the statistics and the data behind that. So you know, what was so
I've put together something on the Media Options blog recently called the statistics behind the upgrade. So this one, I feel like it follows on really well from that Unicorns chat. And it focuses on companies that have upgraded to a oneword.com domain name. And I looked at data from 383 of these companies that purely upgraded their domain. So I discounted rebrands, for example. And I really wanted to find out what the deal was, because on a previous Sherpa show, I said that I felt like .co was the ultimate stepping stone domain name, meaning that companies that start out on a .co almost always move to a .com. And while that's still true, I found out that the majority of upgrades on this list were .com to .com.
Huh. Yeah, that's a really, so let's just stop there for a second. That is a really interesting data point. So you're saying like, okay, look, like running the numbers on the upgrades coming off of Elliot's site, right? Using the list from embrace.com. You know, companies upgrading to a oneword.com, looking at about 400 of them, right? The most common upgrade path is still com to com. You know what I'm saying? So it's like, now you've got maybe 10%, you know, IO to com, similar for co to com, which we've all, you know, which we know is a common path, is a pun intended common path, you know, of upgrading. But, you know, they're still starting on most of them are still starting at a .com and then upgrading to a .com. Like that's pretty, you know, and not to turn this into a big old .com love fest. You know, we always say com is king, but we just see it in the numbers, right? And at the end of the day, and even in our own portfolio, we've got plenty of .ios and .xyzs and .clubs and, you know, other extensions. And we've got good relationships with folks like Donuts and, you know, who we think, you know, do a terrific job with their extensions as far as getting them out there into the hands of end users who can really utilize them, because it really makes sense where the left of the dot and the right of the dot sync together really well with a business that's utilizing that in a way that really works, you know? But you know, it's
so
still,
James,
like, go ahead.
The question I have, so when you looked at that, was it, because I just saw the first bullet point here, that 25% of the companies had a prefix like pay zilch. What were the other ones that were from a .com to .com? What were those primarily? So it was like
some of them had a suffix. So, you know, like slackhq.com, there was a certain percentage of those. There was also some that had like descriptive words. I can't think of one off the top of my head, but it might be like
something like
technologies.com or things like that. So those made up quite a big portion of those. But yeah, the most significant, I think, was the prefix.
Yeah, so, which is like get, and you mentioned join Clubhouse before as a perfect example, you know.
Yeah. So yeah, all of these prefixes, I feel like they're really easy to acquire for a brand new company. Cost them $10, easy enough. There's still a .com. People still know where to get them at, but then once they get to a level where they can get to, pay for an upgrade, then they get to it.
Yeah, no, and you know, it's funny because it just then makes me want to even dig into the data more, to the extent that not that it's available, but it's like, all right, you know, then how many people, you know, started in a name before they moved into a get this or join that? Like, is there, is there a sort of a opportunity in those kind of names, you know, for companies that are using something else even before, you know, is there, you know, are there multi-step upgrades that we see taking place, and, you know, and things like that? And I know this isn't in the data, so it's just more or less I'm just kind of, you know, thinking out loud. But but I mean, I think that's some pretty interesting stuff, man. I think it's like when you look at, you know, again, the fact that you're really going from a com to a com, but you still see a pretty healthy amount that are also doing, you know, these other, you know, from other extensions to a com, and domain upgrades in general. I think when you look at timing, because you see most of these taking place at what level, like what stage of funding? Do you know offhand, like where most
That's
of
a great question. That's a really good question.
So this is going to be an upcoming article on media options, actually. So I haven't gone into the data properly yet, but I'm going through a few hundred one-word acquisitions and just seeing when they occurred, what the funding round was close to. Like just from an initial viewpoint, I feel like a lot of these happen around that Series A funding round. That seems to be a really significant one. I don't know whether that's something that you guys have experienced, whether your clients have come to you and said, hey, we've got this funding round coming up. We want to secure this domain name with the money, some of the money.
Well, it's the best point to leverage, right? Once you've crossed that, now you're talking the prices go up, you know, I mean, now you're on people's radars. So it's like, hit it there before you, right?
Yeah,
so
no, I think...
Is that before the Series A is announced?
A lot of times,
you're getting the domain. Yeah. Okay.
Yeah, because I mean, I think it's the kind of thing too, where it's like you have investors that are, when they're investing in the company, you know, that's a prerequisite at times too, where it's like, hey, look, like I'm in, but we got to be better set up for this, you know, for the brand and for the marketing longer term, you know. So we definitely see that, and Yeah, and I think it makes sense. It'd be interesting to see too. Like, okay, well, how many how many do the upgrade at at the Series A when there is a Series B or C, or is Series A all there is, and things like that. You know what I mean? So, not again. It's funny. Data is like like statistics. Like they talk about like. You
can lie with data.
Yeah, exactly. Because there are ways and things, but I think each one of these things is super interesting for us in our space, because even if it's like unclear, we don't have the full picture, or we're using smaller sample sizes, we're in a liquid market without a lot of transparency. Right. And, and some of that is by design, and if you talk even Andrew and, I think Rick Schwartz would say that, they like the fact that there's no transparency. They don't want people to be comparing like, Rick is one of those guys, and he spoke at, via simulcast or whatever at NamesCon, and he gave a really good talk with Kate Buckley kind of quarterbacking it. And, and some of like, and Rick's thing is always like, he doesn't, he's like, look, I'm not selling you a domain based on the value that somebody else sold the domain for. He's like, I'm selling you the domain based on what the value is to you, and therefore what the value is to me. And, and he says like, look, and it's not that my domain is too expensive. It's that your idea is too small, so it's like this domain. Line, yeah. I love that line. I've said that like a dozen times, to the point, at some point, Rick, I might just take it and stop quoting you. I'm just kidding. Or stop crediting you. But I think it's so true, because when you look at like, ultimately, these domains, they don't exist completely in a vacuum, but it's like, all right, obviously the value that it is to the particular perfect end user is one thing, but when you're looking at these premium domains that are, one word generics, for example, they could have value to multiple people, right? So it's not just like, oh, hey, you're kind of squeezing me for this because we've got the money and we're about to get funded and this and that, and it really doesn't have value to anyone else but me. But it's like, well, that's not actually the case. When you look at these these keywords, these really huge terms, look at how many brands are using them.
Well, I have a call here in like 10 minutes. We got to wrap this up here, but that's exactly what they said. Like, oh, we're the only, no one's else gonna buy this. Like, listen, it's a word, it's a one word. Like, so we'll see where that goes. But yeah, we hear that quite a bit. It's like, that perception. I had another point. I completely forgot it. On the upgrade section. Okay, never mind.
Well, either way, Chris, so here, real quick, for the benefit of the audience. So when you get that kind of, that pushback, right? Like that objection, how do you, and someone says, hey, look, there's no one else that, this name is only worth something to us, right? And if it is like a oneword.com, for example, like do you point them to the other brands? Do you use specific examples? Like, what do you do there?
Basically, it's just simply not true. Domain names have value, right? There's the raw value. There's how many brands are out there that call themselves the same thing. So, you may think that, but there's 45 different trademark classes. Like, you got a trademark? Great. So do I. Like, I've got a, trademark for Vivace Nutrition. Wonderful. Now there's 44 other trademark classes. So, the fact that you have that, all you're doing is it's a bigger risk. In fact, the more that you brand on that, the bigger the risk that you have for your ability to scale, because you're going to basically make the opportunity where this brand's more valuable, and a company can come in, they can cash the momentum that you built, and then they can own leadership position. Some of these stores of Kraken Rum, workforce software. But going back to the I remember my point now is that it'd be interesting to see, James, as these different funding rounds. Because what I found is that there comes a point in there where some of these companies, they get comfortable in their pain, right? So you're reaching out, the domain name's available. Maybe it's the first time it's available. It's like, oh, wow, the crate, that's wow. They kind of scramble around. You tell them the price. They come back. They say, you're crazy. They offer some, maybe 20% of that value. And, so at first, like they're like, okay, wow, yeah, this is available. That's, it's kind of a shock. And
so really motivated straight off the bat.
Well, I don't know if it's necessarily motivation, but it's like, wow, okay, they start to see it, and then they slip back into their current operating mode, saying we're comfortable. And then what happens is that, they're just comfortable with their pain, right? They know their models, they know they put so much into marketing, they get so much back, they've got their SEO. Then what happens is it sells, and then they're shocked, literally shocked, and they say, what? We'll offer them 2 times more. And it's like, you go back to their party and they're like, are you kidding me, Chris? Like, of course not. Like, this is our brand too. Now it's worth 100x, this domain name is worth 100x. So that's the interesting thing in this funding round. And from the domain investor standpoint is like, it's this toss up, right? So you want to wait for this brand to grow, but at the same point, they get comfortable in their pain, they get comfortable in their operating expenses, and so they don't move on to acquire it, right? Until someone comes in and shakes up their world, right? So maybe it's the biggest, like a really big investment round, or they're going public, but something has to shake that to say, hey, you need this.
So do you think that there is a peak of interest? Does it go like a wave, a peak of interest to start with, and then it drops off as they get more comfortable with their domain name that they're on at the moment, with the marketing budgets, all of those things, and the interest in a certain domain drops off? So perhaps a domain investor might have missed the boat with their potential to sell. So,
well, yeah, I did a. I'm starting to get on Twitter. I gotta pick it up, but that in LinkedIn, it was like domain names go up in value, but do offers go up in value, right? Domain name goes up.
Yeah.
There comes a point in time where you might get the best. Like at some point, you will get the best offer for your domain name. Will you be able to recognize that? That's the question.
Mediaoptions is the industry's leading domain broker specializing in domain acquisitions, high-value domain sales, and domain name consultation. As pioneers and thought leaders on the subject of the domain aftermarket and domain name value, plus through their clear domain acquisition service, Mediaoptions offers startups and established corporations an unparalleled scope of high-value domain options, providing access to domain names and curation technologies not available elsewhere. Mediaoptions believes in the power of a great domain name and is dedicated to helping you obtain yours. Call or email today to put a domain to work for you.
We only got about 10 minutes. Let's move really quick, and we got 2 use cases to talk about. Let's give them 5 minutes each. Let's start with strive.com because we're talking about upgrades. If
we don't get to the other one, that's no problem.
Yeah, no, but I think we can do Strive, we can do Fetch, and then we can call it. I think that's all good. And then, cool. So let's talk really quick about Strive. And so what did you see in that, when you did your research there?
So yeah, Strive Asset Management is a brand new company. It described itself as a way to invest in the stock market without mixing business with politics, and I found that quite an interesting, curious line.
Okay,
the company's already raised $20 million in funding. It's backed by the likes of PayPal co-founder Peter Thiel and hedge fund manager Bill Ackman. So as I said, it's a brand new company founded in 2022, and it started life on strivefunds.com. But in July, the company secured strive.com after acquiring it from a Canadian business consulting firm, which I believe had been using it probably since the 90s. So they've transitioned onto strive.ca, made room for Strive to become strive.com. And it was a really quick changeover for them. They've already gone on to strive.com. Sometimes, like with zoom.com, years after, they're still on zoom.us. So
right.
For these guys, they've gone straight.
Yeah, and I think so. A couple of things for this that I think are interesting, when you look at who the investors are, you've got, when you look at who the investors are between Peter Thiel, Bill Ackman, you've got some of the biggest, investors in the world, right? Setting aside maybe some of the political slant that they're, as far as these guys that feel a little, sort of little oppressed by the cancel culture of Silicon Valley, whatever, we can leave that for a different day, different discussion. But I think you've got very seasoned, successful people that are backing this thing. So, and I think that's always a great sign, because I think, and then you see that, the value that they place on, the domain name for their business, and you realize how important it is to the people that matter, at least the people with money. So I think that is, and I think it's one of those things too, where it's a great name for what they're doing, right? The idea of this kind of goes back to what I was saying, when you've got these oneword.coms, and I say this all the time. Somebody mentioned this on Twitter the other day, that, not all oneword.coms are created equal, right? And this is one of those that, it passes the radio test. Someone says Strive, you know how to spell it. You're not trying to spell it with a Y or something like that. And it's this sort of, and it's aspirational. Like, I mean, it's literally the term in itself is an aspirational term, talking about striving, you're trying to gain, you're trying to grow, right? You're trying to get, you're trying to acquire, and, and matching that up to a site to invest your funds to grow your portfolio or whatever, make money. To me, it all syncs together like perfectly. This is like a perfect example of like everything we talk about, why it matters, and how it, and sort of like the prototypical use case, And
that's a great point, Gene. I mean, like two seasoned investors, right? Top of the game. Listen, they took it down, right? They got their .com, they got the raw version of the brand, so it's intuitive. Like they understand, hey, great brands. They just the path is simple. It's effortless. There's trust.
Yeah, and that seems to be the way with really seasoned investors like Mark Law. A lot of his companies, they're like Jet.com, Wizard.com, everything that he's involved in has their raw.com domain name by the look of it. So yeah, all these seasoned investors, they know what they're talking about, right?
So like I said, I think that one is a kind of a perfect example of what we see with the upgrade. That is the use case, right? But let's talk now. We got 5 more minutes before I know Chris got to go, and we're almost out of time. But let's talk about Fetch, because now this is actually in the reverse. You see, there's upgrades, and just so everyone doesn't think everything we're doing is rah.com upgrades. This is actually the opposite. In this case, you had a company that had Fetch.com, and they downgraded. So now the question becomes, did they do so? Now they came out and made a statement. So this is what we're talking about is, why don't you go ahead and set the table with Fetch?
Yeah. So the company is a delivery company. I think it's a fairly local company to like the southwest of the US. But They came out and said that the domain change quite more accurately describes our services and helps avoid confusion with other businesses that have Fetch as part of their name. And I'm calling bullshit on that. I think that they just got a good offer on their domain name.
Yeah,
it's
well,
too
I
good
think
to be true for them.
Yeah, well, and I would agree with you. I think it's an interesting thing. I mean, it shows you that though it can happen in the reverse. And it almost also shows you, well, what happens when you have the company that had the killer oneword.com domain. And, what does the seller do, right? Because not every instance is a seller that's a domain investor or a business that's gone out of business or someone who's, unfortunately passed away or something like that. You have situations where you have an active operating business that decides to take the money and, and downgrade the domain. And then, so it's like, what happens on the other side of those transactions when you have an ongoing business, right? And this is one of those things. And what else are they going to say? Like, oh, hey, we took the money, we felt like it was a better use of the funds. I guess they could say that.
How much did Fetch Delivery raise?
I don't know if they raised like $5 million a few years ago.
Yeah. Okay. There you go.
Yeah.
So
you're talking
$500 million.
And that is a great point, right, on this deal, because you've got on one side Fetch Delivery, who is the seller, and on this side Fetch Rewards, who is the buyer. The seller had, to our knowledge, has raised $5 million. The buyer has raised $500 million. You know what I'm saying? Like, so, I mean, that's like,
they probably got like 2 years profit. It's like, they probably got a good, 500 million, I don't know if some of that it's just crazy. 500 million. I don't know. Yeah. I look at that business model.
Yeah. And it's interesting because if you think about who's, you got the one is a delivery service. The other one is, it's a reward service, right? So it's like almost like credit card, like some kind of brand reward, cards, loyalty program, that kind of stuff, right?
Yeah.
It's interesting because, look, I think you can make the argument that the delivery company has Fetch is a better domain for the delivery business than for the rewards business,
Yeah,
but
definitely.
But the rewards business still felt that Fetch, which I do think it makes sense. Again, you can draw those distinctions. In some cases, I think it's a more clear line between the company, what they do, and the domain or the word, actually. In this case, you can still make you're fetching, you want to collect, right? You're collecting rewards, right? And so in the process, you're going and getting them, you're fetching them. So I think it makes sense. And it also shows you too, though, it's like, okay, and you can argue on this 1 to 10, who does it fit better with? But either way, it works for both. And both are using Fetch as a brand. And
I'm looking at this. I might have my kids like sit outside Walmart, but like, hey, can I scan your receipt? You know, and then just like get these fetch rewards.
Oh yeah, there's probably there's a whole bunch of businesses to build around these kinds of things, these neat things.
Yeah, it's like there we go, baby. We're in the business of scanning receipts. Hey, we just want to scan your receipts for rewards here.
Say hey, or just pretend you put on your Walmart vest and just pretend you're the receipt checker. Oh, they got you. Oh, I don't think you scanned it properly. Like, according to my scanner, it didn't check. I got to scan
exactly.
it.
My scanner doesn't work. My phone works. Hold on a second here. Man, honey, we're going to Mexico this week. Let's do it.
But I think, hey, look, but yeah, I mean, for me, it's, I mean, I would hope that the money was worth it. I hope that, it was good. I'm sure it was the right call for their business to do the downgrade. I think it's unfortunate because, again, I think it's like, you cap yourself. You're putting yourself in a worse spot from a competition standpoint. You're basically saying, hey, we don't want the global positioning of the, sort of leader in front of mind market share for the general public for this term, this domain, and for our actual brand. And instead, we're willing to sort of take this, this supplicant, kind of like back seat. I just hope the funds were worth it. But I think it's like you said, man, I mean, when you got 5 million versus 500, I mean, money talks. And this shows you too, it's like everything is going to flow, to not just the best use, but the deepest pockets, or some combination thereof.
Here at Fetch, and it's like, I'm not like, looks like stock photos, Fetch delivery, right? Stock photos and interesting.
That is another really good point too, because it's kind of like it's showing you.
And
like,
it's not loading all the way for me. So who knows?
That's really interesting. Yeah. It's like if you compare the two sites, like, and right, same deal. Like maybe it's my browser, maybe it's your browser. I don't know. I think if you accept cookies, it works a little better. But if you compare the two sites, I mean, Fetch Rewards has a cleaner, like more robust site, Fetch Delivery does not look like it is as robust of a site. No disrespect, it's still a fine website. But again, I think you're talking about two different animals when it comes to.
It's only 4 different cities too, Santa Fe. But I mean, that's not, they probably won big, they probably won. Maybe they're looking at a rebrand. They probably got a good sale from it. They're in 4 cities. So for them to come and rebrand, it had to be a good amount because it will impact their business, especially if they had billboards and had advertising up. Now they got to change that to Fetch Delivery. It's like their whole.
There's a lot that they got to think about when it comes to doing a full-on rebrand, and, but I will say this, right? So here's something though. And then this, I think, is something that's to Fetch Delivery's credit. And I think is a cool thing for them is that they bought the domain fetch.com and, with some of the funds that they raised, I'm sure. And then they went and sold it. And I would bet you that they probably sold the domain for as much as they raised, meaning they were able to leverage this oneword.com, this high value premium domain asset, this high value digital asset. They were able to leverage that investment for the real true benefit of their business to bring a big influx of cash when they probably needed it. So at the end of the day,
that's a great. I think that's the main point, JT, is that really domains are assets, right? It's not a marketing expense. This asset they were able to leverage and probably got a phenomenal sale from it. Looking at their site, they're only in the Santa Fe area. So, amazing, right?
This is a local business that probably made like 30x, what their annual revenue is off flipping the domain name. It's like, even though we may look at it like in this deal, Fetch Rewards ended up with the domain. So, they quote unquote won. But it almost like everybody won.
Everyone won.
It's like you're at the blackjack table, and I do this all the time. When we're at the blackjack table having a good time, Vegas, NamesCon, whatever, and the dealer busts, and it's like everybody wins. You know what I mean? And like as long as you didn't bust yourself.
That's a great point. Everyone wins, and domain names are let's just stop it there. Like domain names are assets.
Yeah.
In this case, this company bought this asset and was able to sell it for more money. Most likely, it had to be 100%, right?
Oh yeah, they made money. I'm sure they made a significant amount of cash on the sale of the domain, which was important for their business. So they won too. Everybody wins, and then Fetch Rewards gets the the onewordkiller.com for them to build a global brand and global business on. So I think at the end of the day, like I said, domain names, everybody wins, you know?
Great line to finish on.
All right. So with that, listen, everybody, I want to say, first of all, thank you to Chris. Thank you to James. I always love this show. This is why. This is just great stuff. And to the audience, I want to say thank you to you guys. As always, like without you, there's no us. And we appreciate y'all being here with us. Be sure to comment on our DomainSherpa.com on the page. Hit us up on Twitter. We're not hard to find. Let us know, good, bad, ugly. You like it, you don't like it. You got suggestions, you got comments. We're around and always happy to chop it up. This is what we do and this is what we love. So appreciate y'all, and thanks again. And next time we'll see you here on Domain Sherpa, where all roads lead to domains. Peace out.